Hello, my name is Debo Adejana, real estate entrepreneur, MDC of Realty Points Limited. And you're welcome to Real Estate Business with Debo Adejana. Now, in this episode and the next episode, I'll be sharing what I consider the 5 most important mortgage loan pre-qualification criteria. If you note what I'm about to share today and in the next episode, and you make sure that you tailor yourselves to suit, okay, these things, there is no way you are not going to qualify for your next mortgage pre-qualification test or whatever, okay? So pay attention. Now, in the world of credits, there is what we call 5 C's of credits, okay? And I will be using the important things as it regards to mortgage, okay, to explain the 5 C's of credit, basically, so that you will know the next time you are applying for that mortgage that you would qualify or not. I'll be right back. Welcome back. So, the first episode of this, the 5 most important mortgage loan pre-qualification criteria, I would explain 2 or 3, and then in the next one, I would explain the rest, okay? So let's start with what we call character. In the 5 C's of credit, like I said, this is called character. And in simple layman's explanation, it is how one can be sure that you would pay back on your loan, okay? How that is done in the credit world is largely by looking at your credit history. If you have the history of not paying back or dragging on repaying your loan, that will constitute a challenge to your being approved for your mortgage. And these days, there is credit bureau active in the country. So if you've taken money from microfinance bank, a regular bank, mortgage bank, or cooperative or anything, okay, and you did not carry out your repayment terms as spelled out to the extent that you've been reported in the credit bureau, it means your information is there, and it becomes a challenge for you to be able to scale this order whenever you are being examined for any loan, even mortgage loan. So be mindful that you fulfill your obligations. I know in this part of the world, people still don't think of it as very important, but you must be mindful of your credit history because it helps you to be able to qualify for mortgages, or it can disqualify you if you've been known to be someone that would always default and will always make the loan transactions go bad. Be mindful of that. So character, because it's a different thing for you to have the means to pay and want to pay. Some people don't just want to pay. How you know that is by their credit history. Are they the type of people that default? Because before you go into any credit, you've said you are going to pay and you are able to pay. So why didn't you pay? And all of that. You have to explain that. That's why credit history is a major thing in any developed organization. Any developed world. Credit history. So be mindful of your credit history. How do you fulfill things that you have? Let's say you have an agreement to pay someone in installments. How do you fulfill that? Okay, you borrow money from any institution. The ways you pledge to pay it, did you go through that means? Did you pay as promised? That's number 1 important thing, your character. Number 2 is your capacity. Because if you have the character, you are adjudged to have the willingness to pay. You need to be adjudged to have the ability to pay. Ability to pay. And when it comes to mortgage, okay, one of the ways by which this is measured is they will first of all look at what are your outstanding obligations at the moment. What are the loans you are servicing, if you are servicing any, okay? What's the cost of your current housing unit? What do you earn? And what percentage of that, constitute what you earn? Of the obligations constitute what you earn. Now, would what is left be sufficient for you to be able to pay back the loan that you are now taking, your mortgage loan? And this is the rule of thumb. By UN standard, You are not expected to spend more than about 33.3% of your earning, okay, on your housing need. So the implication of that is that if you earn 100,000 naira, for example, nobody is expecting you to spend more than 33.3% on whether your rent or your mortgage repayment. So when you are approaching a mortgage bank, they cannot give you a loan that will make your monthly repayment, that would have a monthly repayment that is higher than 33 point something. So you have to benchmark the property, the kind of property you are applying for, okay? The amount versus what you can pay, what you have capacity to pay. And on top of that, they will still have to ask questions as to whether you have some obligations, okay, other than this one that you'll be incurring, to be able to judge the fact that you can take on this loan that has 33,000 repayment, even though you earn 100. And that is why you would see that a lot of mortgages, especially in this part of the world where we are still engaged in a lot of very creative mortgages because of our financing model, okay, where yes, a developer is constructing and the mortgage bank is as well disbursing your mortgage kind of just to make the property ready in time. They usually want to shorten the process not to be beyond 12 months. The reason is they don't want you, with the burden of paying the mortgage, still be dealing with the burden of paying rent. So you've not moved into this house, okay, and you are paying mortgage already, and you are paying rent. That will hit a lot into your what you earn and may impair on your ability to be able to service your mortgage, okay? So that's why that is always a concern. Capacity is measured 33.3%. So look at it anytime. And that's why I usually advise people to look at their status, what they earn, and address things more realistically in the sense that if you're going for mortgage, for example, and this is what your earning can afford, go for that. Nothing stops you when you come by money, okay, by some other means of maybe business you do on the side and all of that, to still be able to push that into either servicing, paying down your mortgage, or buying another property if that is sufficient to do so. Rather than saying no, you want to see how you can get a mortgage on a property that the repayments far exceeds 33 points. Sometimes some people will be having repayment calculation that is up to like 60%. How do you cope with 40% of your income? Okay, how do you cope with that when you already spend 60% on mortgage? And it's not as if you earn 10 million naira. If you earn 10 million naira, for example, per month, and you use 6 million to service loan on a monthly basis, 4 million, depending on your lifestyle, may still be able to, take you to the end of the month. But this is how it is calculated, 33.3% of it. So the next time they tell you you are not qualified or this is the mortgage size you can get, know where it is coming from. And I must say here that there are a lot of creative things that can happen, even with all of these restraints, such that middle income earners can still enjoy mortgage. Hybrid methods that are available. If you talk to your developer, you talk to your mortgage banker, especially developers and mortgage banks that service the low income earners, low and middle income earners, they know how to come up with these hybrid and creative methods that can enable you to be able to, enjoy and qualify for some of these loans. In terms of the loan amount, what the developer will allow you to take, when you take possession of the house, when your mortgage will kick in, mortgage repayment will kick in, all of those combinations can happen. And the exploring the mortgage opportunities available in the market. The third one is capital. Now, in the sense of mortgage, this is where and how capital works. You must have a skin in the game. That's it. You must have a skin in the game. That is what they call your down deposit, okay, initial deposit, or stuff like that. So if you want a mortgage, or if you want to buy a property of, let's say, 25 million naira, you will hear the developer or the bank saying that you need to make an initial deposit of 10%. Meaning that at least from your prior efforts before now, can you cough out 2.5 million naira as initial deposit? Probably you got it from your savings, or you sold one or two things, your assets, to be able to raise that money. Meaning that out of this amount, the loan they will give you will be on 22.5. You already have a skin in the game, okay? initial down payment of 2.5. What that enables you to do is that you don't want to lose that. You have a skin in the game. You know what a skin in the game is all about. So that you also have, something to lose should in case the whole transaction goes bad. And it's a general principle, even when you are doing business with people and all of that, doing joint venture and all, you usually like that people have a skin in the game. It's not, sweat equity is not enough, okay? So in this case, this is the other important criteria. Do you have, what is your down payment? What can you afford? So usually you will see in our environment that the more of this down payment you can afford, the more likely you are able to get the loan. So if you can do 20%, if you can do 30%, if you can do 40%, if you can do 50, 60, it increases your chances of getting the loan. Because one, you have more skin in the game. Two, it reduces what you need to pay to service the loan on a monthly basis, and probably would enhance your qualification, for the loan in terms of 33% of your current income. You understand that? So please have this in mind. This is what I'll be discussing in this episode. I believe that you've enjoyed it. You've, picked one or two things from it. The next episode, I will discuss the other two elements. They are also very important, and you must be able to relate to how they affect your mortgage qualification. Okay? I remain yours sincerely, Debo Adejana, in the business of helping you sack your landlord. Please continue to watch the video if you like it. Click the like button. If you have any question at all, please drop it at the comment section. If you've not subscribed to this video, I would encourage you to this channel, I would encourage you to subscribe, okay? Click the subscribe button and click the notification button. What that affords you to do is that whenever we drop any video, you are one of the first to get notification, and you can watch at your convenience, okay? I will bring you a concluding part of this topic in the next episode. See you then. Thank you.